You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's Inauguration Day, 1/2021. Well, it appears Trump was good for gold. It looks like Biden is going to be even better for gold, at least if today is any indication. Well, we got gold on the spot market, Kitco up 26.50 the ounce to 18.66. Silver up 51 cents, that's 2%, to 25.69. Well, if you remember, a couple of weeks ago, we had a precious metals slam. Actually, last week, options expiration definitely played a role in it. And we're going to see a lot of interesting gyrations. That's why we're checking in with our good friend, Andy Schectman, who is the proprietor of milesfranklin.com. That is the only place where I buy metal. It's the only place you should buy metal. It's the only regulated, licensed, bonded bullion dealer in the good old US of A. And as I always say, when you buy from Miles Franklin, they ship. In any event, Andy is with us. If you got a question, you got an opinion on the price of gold, the direction it's heading, where we're heading as a nation, just send us an email to kl@kerrylutz.com. Andy, when we last spoke, it was on Mugs and Metals, which is really a wonderful show. I applaud you guys for starting it. I get to meet so many interesting people, get different views. It was a lot of fun. But hey, now here we are. The Trump era is over. The Biden era has started, whatever that means. That remains to be seen. And of course, gold for the past week has been trending higher.
Kerry, it's good to be back. Thanks for having me, buddy. Yeah, I mean, it's. I think gold has nowhere to go but higher in this atmosphere, or with this administration, where we're expecting more welfare, more spending, more debt, more regulation. And I think that side of the table, the left side, realizes that the more they spend, the more powerful they become. They can regulate, they can control, they can subsidize, they can bail out. And I think the gold market intuitively understands that. Certainly, there have been a lot of things over the last several years that have spoken loudly for the benefits of owning gold and for where we think it's going. But no question about it, when you have both houses of Congress and the White House controlled by the Democrats, I would believe, regardless of how you feel about it, that the trend for gold should be higher just based upon the amount of money that they want to spend. Look at it this way. According to Bloomberg, $8 trillion worth of government debt in the United States will mature this year. And a trend that we've seen, Kerry, is government debt not being rolled over the way that it normally is. The Chinese and the Japanese in particular are selling their bonds. I would argue the Chinese are using it to fund their Belt, Road, and Rail Initiative, which is the largest infrastructure program in human history connecting Asia and Africa. So they are using, instead of rolling over the bonds, they're using the cashed out proceeds of those bonds to finance this program. But I think any way that you look at it, when you realize that $8 trillion worth of government debt will mature this year, and you have the Congressional Budget Office expects another $2 trillion in deficit this year just related to COVID stimulus. That's $10 trillion worth of government debt that will need to be placed this year. That's $300,000 per second. I think the gold market sees this, and this is the reaction that I would expect to see in that type of environment. And certainly if you follow the gold market long enough, you know there's volatility, there's counterintuitive action, there's frustration. Yet it continues to march higher. And, it was up over 30% last year. Silver was up over 50%, over 100% since March. I think the metals saw this coming. They're moving higher. And until we see a new plan of action by the Democrats where it's less spending and and cutting of or let's say implementation of austerity programs, which we're not going to see either. I think the trend for gold and silver over the next several years is certainly much higher.
Hey, when college students stop drinking beer, I'll believe that the Democrats or any politicians are going to cut spending. In our mugs and medals discussion, I don't remember who said it, but basically every president we have raises record amounts of debt. And there's nothing, like you said, here. There's no brakes. There's no stopping it now. And nobody is even talking about it. There's no discussion about solvency of the country, solvency of the currency, stability. All it is just keep shoveling the coal into the furnace until that train runs, that runaway train runs off the tracks.
Well, there is someone talking about it. Her name is Janet Yellen, and I'll talk about that in 1 second. I'm going to first say you got the International Monetary Fund, who just came out the other day and said they're encouraging nations to spend as much as possible, and then after they've spent, to spend more. I mean, that was almost exactly the quote. I was blown away by it. But then I'm reading Zero Hedge or somewhere, and I jotted down this comment. I'm just going to take a look at it here. It says, neither the president-elect nor I propose this relief package without an appreciation for the country's debt burden. So there you go. Janet's talking about it. But right now, with interest rates at historic lows, the smartest thing we can do is act big. And she says this at the Senate Finance Committee hearing. Here
Did Trump
again.
say that?
No, that was Janet Yellen, who is now the Treasury Secretary, the former Fed chairman, saying act big, meaning spend. And, with interest rates low, well, herein lies the $6 million question. With interest rates effectively negative on the 10-year benchmark Treasury, when you talk about them at 80 or 90 or 100 basis points, with inflation running 3, 4, 5 times that, if you ask John Williams, he'd probably say 10 times that, you're negative when it comes to real interest rates. So who in their right mind would, she says with interest rates low, who in their right mind would buy government treasuries issued by an insolvent government that's running incredible, massive amounts of inflation and paying negative yields? The answer really is nobody. And the Chinese and the Japanese are showing that with their shedding of treasuries. And the only one that does that who is stupid enough to buy them would be the Fed. So now you have a Fed that's monetizing our government debt. That leads to hyperinflation and rising interest rates. Or perhaps they say, screw it, and they back away from it, which immediately pops interest rates. The moral of the story is that what Janet says temporarily is true, but both roads lead to higher interest rates. And when you talk about 10 trillion worth of debt this year, that's 300,000 per second. But what happens when rates rise? When I bought my first house, Kerry, in 1994, interest rates were 8 7/8 on a 30-year mortgage. What would that do now to this economy? It would implode everything, because for the first time maybe in history, you have stocks, bonds, and real estate all in a bubble. And what is unusual is that stocks and bonds are normally inversely correlated, but they are now positively correlated. They've lost that inverse relationship because interest rates have been manipulated so low. As interest rates rise, it decimates the real estate market. It implodes the largest market, the bond market. And who in their right mind would buy securities trading at their highest price to earnings ratio, or for that matter, any metric you can find in this economy, when you could buy fixed income from the U.S. Treasury paying 6, 7, 8%? No one would. I don't think we'll see those kind of interest rates, obviously. But the moral of the story is we are in a very precarious position where what Janet says is temporarily true. But when interest rates rise, it'll be a spiritual experience for the majority of the people in the United States.
Hey, and it'll be a shock to the system and a shock to those people who thought they would never rise. So the question is, do you go do like Germany in the 20s and you just go borrow a bunch of money and buy a bunch of real estate and fixed assets? Is that what you do here?
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
If I'm not mistaken, now I'm fairly certain that the mortgage companies readjusted the mortgage payments with that type of backdrop. And look, this is why the Fed wants inflation, because they want it easier to pay off debt. Now, I don't know how that would play out if all of a sudden we went full Weimar Republic hyperinflation, how that would play out on a 30-year mortgage. I don't know what the banks would say about that. I can tell you that those types of environments are real. In that environment, the largest life insurance policy ever issued prior to the war in Germany was never cashed in because the postage stamp was worth more than the face value after the war. And the repatriations went into effect. So, but what you just said is why the Fed wants inflation and why they want their digital Fed coin. You see, the way that money is created in this country is by the banks lending it into existence. A lot of us believe that quantitative easing, which we continue to see, which is the Fed buying the bonds from the banks, that leads to hyperinflation. And in normal times, it would be highly inflationary. Problem is, when the banks sell the bonds back to the Fed that they had purchased originally from the Treasury, they are obliged to sell them to the Fed when the Fed asks. That pushes down interest rates and stabilizes asset prices. But it does not create inflation unless the banks lend the proceeds into existence.
Right.
And the banks aren't lending. So the money sits in a reserve account in their name at the Fed. The bank looks at their balance sheet and says, well, geez, we've had nothing but bankruptcies and foreclosures, and our balance sheets are in tatters have been since 2019 with the repo market problem. So, let's not lend. Let's just keep it holed up at the Fed, earning 80 basis points safely. The Fed doesn't like that. Fed says, we want inflation. You need to lend this money into existence. Banks say no. So the Fed lobbies Congress with the Banking for All Act, I believe it's called, and there is your Fed coin. If we see the Fed coin, now the banks can do the work, or the Fed can do the workaround, usurp or sidestep the bank's lending process and just give people money into their new Fed wallet on their iPhone. And that's coming. I
Fed
believe
wallet,
it will. Yes, and it's coming. And I think that we will see that maybe even this year. You're already seeing it in China, the digital yuan. You got Christine Lagarde said it's going to happen in within a year or so in the Eurozone. You'll see it here as well. And it serves many purposes. It certainly puts a thumb on top of everyone's spending. We no longer have privacy when you lose $20 on the golf course or pay the babysitter or win a little money playing poker. All of that will now be on a ledger controlled by the Fed. The complete abolishment of privacy will be gone. But more importantly, the Fed will be able to enact its policy seamlessly, whether it be negative interest rates to get people to spend or paying money into the public's hands to stimulate the economy, whatever it may be. The Fed will have the power to do that with the click of a mouse. And so things are changing. Times are changing. So when we talk about owning precious metals, Kerry, it's not to get wealthy. It's to be outside the system and to protect ourselves against what's coming. And I'll tell you something. If you look at what the most sophisticated, well-funded, well-informed investors on the planet have been doing since 2017, it is a pattern of repatriation of gold away from the Bank of England and the New York Fed. It is about massive delivery of metal off of the COMEX market by sovereign wealth funds and family offices and billionaires. It is about reclassification of gold as a tier one asset. All of the movements that we are seeing by the elite, which are always 2 or 3 steps ahead of the rest of us, are of acquisition of non-dollar denominated assets, from cryptocurrencies to precious metals, removal of third-party counterparty risk, pulling it off of the exchanges, away from the Fed, away from the Bank of England. And it is something that we've seen repetitively since 2017, and I think it will continue this year. Already, this group, the others on the COMEX, is record long in silver in their position, and I think that this will be a trend that will continue until the COMEX no longer delivers metal off the exchange. It has the potential for the first time in my career to legitimately break the COMEX if they continue to request delivery in the manner that they did last year, which was about 10 years worth of deliveries to this group, the others, which are family offices and sovereign wealth funds, basically, and incredibly wealthy individuals who are demanding delivery off the COMEX, which is as unusual as anything I've seen in 30 years. Typically, only a few percent of those contracts ever stand for delivery, and now it is a massive amount by a very segmented group of people who are challenging the commercial banks regardless of the price. It's an interesting time.
It really is. And Andy, look, last week was options expiration, and look how they slammed the price of metals to try to make those contracts finish out of the money, right? Under 28.50.
That's been out of the playbook, their playbook, for a very long time. What they do is they suck in the speculators by letting the price rise. And again, if we're talking options expiration, that kind of fits what I was just talking about. The options are issued by the commercial banks, and typically the people that are buying them in this case would be the specs or the funds that buy them. And so they suck in the speculators. They let the price rise above the strike price. They get more and more people involved. And then as we lead up to options expiration, they typically slam it within 24 to 48 hours below the expiry price. They collect the premium, and those options expire worthless, and they rinse, wash, and repeat. They continually do it. You would think that the speculators would finally catch on and get a little smarter. But here's where it's different. This third group, the others that I've never seen on the COMEX before that we saw last year, is regardless of the price slams, they're not bailing. They're not selling their positions. They may have to meet margin call, but they're not selling. They're standing for delivery. That is the real difference. So typically, COMEX is like a casino, and people speculate on it. Companies like mine hedge their exposure. Farmers will hedge a crop that they plant in April and plan to harvest in September, October. With all the uncertainty, they will hedge their production into the future, or we will hedge our inventory to remain market neutral. Most people don't take delivery, but this group is and has been, and it is changing the narrative very quickly on the COMEX. And if you just take a step back and tune out the noise and look at what the influential, wealthy people are doing, it's very obvious. Since 2017, they have been voraciously accumulating gold at subsidized prices and getting it out of harm's way, removing counterparty risk. It is a trend that I see continuing to this day. So it's important to see that, because I think if that's all you do is not what they say, but what they do, you'll probably come out ahead.
Yeah, well, you have to be able to read the tea leaves. And clearly, everything you're saying is indicated by the actual events taking place. And I think that's what's really important. Forget about conspiracy theories. Just follow the money, as our good friend Jerry Robinson says. The money is going where it's going, and you've outlined that extremely well. In any event, if you're going to buy metal, the only place I buy from is Miles Franklin. Just tell us, Andy, how we connect with you and how we go about this process.
If your listeners would like my personal attention, and I guarantee you as good of a price as anywhere in the country from a major company, please call or email me directly at Andy@MilesFranklin, Andy@MilesFranklin. I will personally reply or pass it on to one of my brokers who I've personally trained. All of my brokers have been with me for 10 years plus. We are, as you mentioned earlier, and I appreciate such a nice introduction, licensed and bonded in a federally non-regulated industry. Every year, every one of my employees has background checks. If anyone in our company, myself included, had any felonies related to financial services, we would be forever disqualified from doing business in the industry in the state of Minnesota. We pride ourselves at our accessibility. Our reputation is as good as anyone in the industry in the state of Minnesota. Puts an exclamation point on that with our licensing and bonding. Send an email at Andy at Miles Franklin. I will make sure that your listeners get current price sheet sent back, questions answered, little information about who we are and what our programs are. And, one last thing, and I'll let you run, Kerry. And again, thank you for having me on. I love our chats and happy to come back anytime. We are old school in the way we do things. In a digital world, that is certainly convenient, but it also lends itself to the potential to be hacked. And this industry and the financial services industry is the target of said hacking. And we could spend a whole segment just talking about stuff I've seen over the last several years, the conversations I've had with the FBI, and the decisions we've made to be old school. So while we are not online, we are accessible, and our privacy and safety is just as important as yours. And that's what we safeguard. And so, yes, it takes a phone call, but we'll make it worth your while, or an email. We'll make it worth your while to reach out to us. If your listeners would rather call, they can call our main line at 1-800-822-8080. Our website is milesfranklin.com. Caveat, we're building a new website right now, but nonetheless, you'll be able to see who we are, what we're about, and shoot us an email or give us a call. We'll be happy to take it a few steps further.
Actually, if I can, Andy, I would just say, just give them a call. All right. You get all the info you need very quickly. I know in this day and age, in the digital age, it's so easy to send a text or an email. But in this case, you're talking some major money. You're talking an investment. You need to talk to the people on the other end and see that they're there and attentive to your needs, of which, Andy, I might compliment your staff. They've always been top notch and always on the ball. So just give them a call. Andy.
And just make sure that whether you call or email to let us know that Kerry Lutz sent you, or the Financial Survival Network in the subject line, or when you call, it's very important we keep track of that. And we're very, very, very appreciative of our relationship and our friendship, Kerry. Personally, I look forward to seeing you in the next few days when I journey on down to your neck of the woods. I'm getting tired of living in Minnesota. I think it's run its course here. And so the epicenter of stupidity, as I call it, all the trouble started here about a year ago. And I think we've run our course. So I look forward to seeing you in person. I look forward to coming back next time you'll have me. It's always wonderful to chat with you. Love hearing from your listeners. Please feel free to reach out to me directly. And I wish you and your listeners all the best in these crazy times. A happy, healthy New Year, healthy especially. And look forward to picking up where we left off real soon. But never hesitate to check in. I'm just a phone call away.
Absolutely. And when Florida makes sense, you know that the world is really screwed up. We'll leave it at that, Andy. Thanks so much for coming on, and we will see you soon.
Sounds good, brother. God bless. Talk to you soon.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.